Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zach's Market Edge.
Welcome to Zach's Market Edge, the podcast about investing in your life. I'm your host, Tracey, and this week I'm going solo to talk about some hot stocks. I think it's about time we just talked about some of the hottest stocks that are out there. There's a lot of doom and gloom right now. We have the banking crisis. People are expecting a recession. It just seems like nothing is working out there on the stock market, but that's wrong. There actually are some genuinely hot stocks, and they have Zach's number one ranks. So I combined the two. I did a screen for Zach's number one ranks. That's the strong buys and stocks that were within 5% of their 52-week high. So that's pretty hot. I almost did the 100%, but then I thought, I'm going to give it a little leeway there in case some had pulled off a little bit off of those highs. And I got 50 stocks. So that's pretty bullish right there to know that there's 50 number one ranks. Now, remember what the rank actually signifies. It means that the analysts, the covering analysts, not the people here at Sachs. These are like people who work for Goldman Sachs or the JP Morgan analyst or whichever brokerage firm they work for, that they are revising their earnings estimates for the full year on a company higher. So usually that happens after they either pre-announce earnings or report earnings, and it was better than expected for the quarter, and or they raised full year earnings guidance. So then obviously the analysts all have to go like, well, we didn't get that right. And they have to go in and they have to raise the earnings estimates. So you get the Zach's number one rank when a bunch of analysts are usually raising all at the same time. And usually you get a big magnitude of the raises to get the number one rank. So it's real bullish for the stock. That's why it's a strong buy. On the short term, remember, the Zach's rank is a 1 to 3 month recommendation because basically that bullishness can kind of peter out after a month or 60 days. That, after a little while, the next best thing is coming on, right? And the analysts are no longer raising and like super into whatever was going on with that particular company until they either pre-announce or they report earnings again and do the same thing all over again. So it is the shorter term type of recommendation, the 1 to 3 months. But right now, during earnings season, as I'm recording this in early May 2023, there's a lot of hotness going on with the rank because they're reporting earnings. It's better than expected. They're giving better than expected guidance, and the analysts are all going in to raise those estimates. Now, again, I did combine this with stocks that were trading near those 52-week highs. And then, interestingly enough, several of the ones I picked out of the 50 here are also near 5-year highs. So they're even hotter than just the 1-year high. So that's also interesting to me that the ones that had the momentum continue to have the momentum. And what areas are these in? There are a couple key areas that are showing up on this type of list right now. And a lot of them are the consumer-based names. And I have a couple of them on the 5 I'm going to talk about. And then we have home builders. The home builders are on fire this earnings season. Everybody got too pessimistic about their prospects for this year, 2023. They're expecting doom and gloom, housing crash, all this stuff. None of it's happening. And so now there's 9 Zach's number one rank home builders out there. And there's probably some more to come because I saw some number 2s still, and there's a couple that have not reported earnings yet. So they're going to see earnings revisions coming up too. So it's been a couple of years since the height of the pandemic, really, when housing got real hot. I would say 2021, when there was a ton of Zach's number one ranks in the home builder group. Then all the estimates were cut as the mortgage rates rose, but now they're back to being bullish on them again. So I'm going to talk about that in a moment a little bit more because I did pull out one of the home builders to talk about. But I did want to keep it a little bit diverse in the stocks I picked. So I just picked randomly on there. Some of them are names, well, actually, most of them are names you already know, but that's also interesting, right? So let's dive right in. So the first one is on the industrial side. It's the industry-leading water solutions company, Badger Meter. Ticker B as in boy, M as in Mary, I, BMI. This is the one you might not have heard about. It's up 27% year to date. It's at the 5-year highs. Go look at that chart. It's pretty impressive. 2023 earnings are expected to be up 19% year over year. The earnings estimates are on the up increase. That's why it's got the number one rank. It's not cheap. PE is at 51 for Badger Meter, but it's got the momentum. So that's ticker BMI. Okay, stock number 2 is Chipotle. Yes, there were several food restaurant chains on this list because they've gotten bullish again. And I say again because they were bullish coming out of the pandemic. Once it was determined they could do delivery and pickup, then the stocks, turned around, and so did some of the earnings. And then on the reopen, no one was really sure, what would happen. Would people still be ordering online and all of that? But it turns out they did. And now, even with the inflationary pressures, the labor costs, all of that, they've been able to raise some of their prices, and they've still been able to get consumer demand is still there, certain price points. So number 2 is Chipotle, ticker CMG, year to date up 47.2%. It too is at the 5-year high, back to the 5-year high. Earnings expected to be up 32% here in 2023. Super impressive given all the challenges I just laid out with inflation and everything else. PE, it's never been cheap. It's at 46 times. Might be a little cheaper than what I remember. Occasionally, I think it did get to 50 times, but back up to 46 times. But we don't care about cheapness right now. We're just talking about hotness and the number one rank. So it's got both of those things, Chipotle, CMG. Then we're going to switch over to the opposite side kind of Chipotle on the consumer side, and that's luxury. Luxury apparel, luxury accessories, luxury travel with LVMH. I don't talk about it that often. It's traded on the pink sheets under L as in Larry, V as in Victor, M as in Mary, U, Y. So it's one of those, it's the 5 letters, LVMUY for LVMH. This is the Louis Vuitton plus a bunch of other things. They own Belmond, that's on the travel side, a ton of other brands. PE now for them is not cheap either, but a little cheaper than either Badger or Chipotle at 27. They are up 23%. No, year to date up 33%. Sorry. Year to date up 33%. They too are at a 5-year high because the luxury is holding up and China's reopening. That's a big luxury market for them. So everybody's loving these luxury apparel and retailers. Just so you know, on the over-the-counter where it trades, the average volume is 156,000. So it's not huge, but it's not like, super small. It's not under 100,000. So I'm liking that in terms of ease to trade, given that it is a foreign company. Dividends, they do pay one, yielding 1.3%, and earnings expected to be up 23%. So that's the 23% on the earnings for this year. And the analysts are higher within the last month there because, again, luxury is where it's at. And LVMH is basically maybe the top luxury brand. If you ever listen to the RH conference calls for the furniture retailer, they talk about LVMH and kind of being in the same category as them on margins and just luxury in general of the branding. So nobody does it better. LVMUY is that ticker. Number 4 is back to the food side, but it's an interesting one because it's not my favorite, but it is hot. SHAK. Yes, it's back. It's back from the brink there. Its ticker is SHAK, SHAK. SHAK. And they are expected to be earnings positive again, finally, here in 2023. Earnings expected to be up 122% to 7 cents from a loss of 31 cents last year. So that's positive, and that's a good thing. PE, of course, is insane because they're only going to make 7 cents. So it's 942 times. But you're not buying the Shake Shack for the PE either. You're buying it for the momentum and the growth. So you're buying it for this turnaround in the earnings. And year to date, everybody's already in this one. Year to date, up 59%. Over the last 2 years, however, it's still down 26%. So you can see it came way back down. So it's not near a 5-year high. This is one of the few that's not near it, but still impressive rally for this year. And it's got this good story of the turnaround. Analysts are more bullish on it now. So that's Shake Shack, ticker SHAK. And then our fifth stock is the home builder. I kind of just looked at the list. They all have the kind of the same story. You can just pick one, any of these 9 number ones, right? So I went with the big one, the industry leader in size, Pulte Group, ticker P as in Paul, H as in Harry, M as in Mary, PHM. And what does this earnings look like? So this is a little bit different than some of these others that I've been talking about, because the home builders, as I mentioned, all have turned it around, and the analysts got too pessimistic, and now they're raising their earnings estimates. That's how we're getting the number one ranks. But the earnings are still expected to be in a decline from last year, because last year was a record year for earnings. So in 2023, Pulte Group earnings expected to be down 18.7% still, even though the analysts are more bullish on it. So that translates to 878 versus 1080 they made last year. But last year, remember, was the delivery of the homes from 2021 sales. So their delivery times got pushed way back out because of supply chain issues, labor issues. It just was taking longer to build the houses. So if you put the down payment on in 2021, you didn't get it until 2022, most likely, depending on when you did it in the year. But those were big sales. And so that translated into the earnings for 2022. Now sales are down dramatically, double digits for all the home builders, and off those record highs because of the high mortgage rates. So the buyers got a little more cautious. But margins are still good, and they are finishing delivering homes that were ordered last year. They're delivering those now in 2023. So earnings were always going to decline. But again, the analysts got too pessimistic on the home builders. Even with the high mortgage rates over 6%, they're able to buy down the rates into the 5s. The buyers are comfortable and they're making the monthly payment work for them, depending on the house. They're going down in size in the house and things like that. And throwing in some incentives from the builder on, finishes and things to get you into the house. And so they've had to rethink what's going on with the home builders. So 5 estimates are actually higher on Pulte in the last 30 days. So even though it's going to decline almost 20% on earnings in 2023, that's an improvement over what everyone was thinking was going to happen. They thought it was going to be like 30 or 40% decline, but that's not going to be the case. So the shares are up 50% year to date because it simply hasn't been as doom and gloom as everybody assumed after the freeze in the housing market last year. And so everybody has dove in. Now, Pulte Group is one of the stocks also at 5-year highs, but it's still cheap. PE of just 7.7, and it does pay a dividend yielding about 1%. So a lot of those home builders have busted back out to new highs, and it is pretty impressive given that the mortgage rates are where they are. I never thought I would see the home builder group, these stocks, this high with mortgage rates over 6%. But that tells you the strength in the housing market, in the labor market, in the consumer, these buyers are putting down quite significant down payments and have high FICO scores. And they are showing some confidence in the U.S. economy that they're willing to be out there buying a new home right now with some of this uncertainty that's out there. So that's a good thing. I like seeing it, but it is very intriguing to see the home builders this hot and on a podcast of the hottest Zacks #1 ranked stocks. I would not have thought that when we started 2023. So let me recap again some of the stocks we talked about. We had Badger Meter, ticker BMI. That's one of the few that's not the consumer focused type of company. Then we had Chipotle, CMG. We had LVMH, LVMUY. It's the 5 letters. LVMUY is the ticker. We had Shake Shack, ticker SHAK. And then we had the home builder Pulte Group, PHM. And what's interesting on this list is there's no tech names. We're not seeing those breaking out with the Zacks #1 rank like we are with some of these other industries right here. I'm not saying there wasn't any tech on the 50, but the common names, the names we all know, were not on the list. So take that for what you want, but something to think about and mull over. That's why I like using the Zacks rank. It does tell you some trends that are going on out there in the stock market. And when you see home builder on the list, you can definitely see the trend, or restaurant chain. There were several others. It wasn't just Chipotle and Shake Shack. There are several others also busting out with the Zacks #1 rank as well. So be sure to check out the Zacks #1 rank. If you're on Zacks.com, you do have to be a premier member to get the #1 rank list. But you can also check out our Bull of the Days that are on Zacks.com every day. There's a new Bull of the Day there. It's usually a Zacks #1. Sometimes it falls to a #2 buy, but it's usually one of the hot stocks. It's featured on there. It's free. You can just go click on it. But you can get one every day, Monday through Friday, if you are interested in just kind of seeing what's in the Zacks rank. Be sure to, tune into the podcast because I'm always covering things with the Zacks rank here as well. And be sure to get us. You can get us on Apple Podcasts. You can get us on Shopify, but be sure to get us somewhere. And I'll see you again next week with some more hot stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.